Hey guys, Mitch here, checking in for the pre-market. Running a little late today. Had to take the kids to school since I wasn't on stream. So just a little behind the eight ball, but wanted to look at the profile coming in today and let you know, given where we're kind of slated to open, what I see. The first thing I will note is that these are not very large positions on the board today. These are quite small in general. Even these seemingly bigger positions are only looking that way because of how small everything is around it. So that tells me right off the bat, a 30-point straddle might feel a little cheap as far as the expected move pricing to start the day. I think we actually have the potential for more range, aggressive range even, in both directions, right? So the first thing I would look at is kind of this overnight high, this 7120 area is kind of the door to the next range up to 7150. Where there is a strong potential if you get to and through that to really ramp up in a hurry to 71.75 based on kind of the shape of these positions. The fact that they're shorts on the dealer side means if you work up over 50, you should have some nice like wind in your sails to move faster and higher. Obviously, that's 2 times the current straddle, but I think the thin nature of the positions here, saying nothing about people defending the prior all-time highs, at those spots wouldn't step in. But from the market maker positioning standpoint, when it's this thin, you've got a lot of potential room to move, right? You're not going to get the help from these flows necessarily or these hedging responses. But there are areas of opportunity. And then to the downside, I do think the 70.90 is like the key strike on the day. Obviously, that's the overnight opening print area as well. But I do think that's kind of the like, well, things get risky to the downside because if you do get some selling pressure and volatility picks up, you've got some positions down here that really react strongly to that. And I just think maybe some caution is warranted. But if you're bullish on the day, you don't have to think about what's down here as long as you hold over 90. That just kind of makes the floor under 90 a little stronger from like the passage of time or that charm perspective and about how those positions decay. It actually, ironically, is the thing that would buffer you into the close, right? If you're staying over that, there's kind of like a passive supportive bidding that happens under the surface down there. But I do think the most important spot to get over early is that 7120, which we're kind of testing right now in pre-market. And then from there, I think there's every potential in the world to get a breakout up to like 7150 to like unlock that next level. But I think if you're not doing that, a lot like yesterday, if we keep rejecting higher, I think there's the potential to kind of get back down into this danger zone that we kind of sold into late yesterday. So could it be right? Could we have that tighter 30-point range? Maybe. But I just think based on the nature of the profile and how thin some of these positions are, it's kind of going to be market's going to tell you how strong or how weak it is, and it's going to maybe move a little bit more or more frequently and range around a little bit as a result of that. So keep your eyes peeled. I'll be doing another intraday update and some things in the Discord. So if you're there, stay tuned for those. Otherwise, you guys can catch me on stream tomorrow morning on the Rake Trades Network for Project 365. All right. Have a good trading day.